Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is October 14th, Monday. We're going to take a look at a subscriber suggestion here. Arlene commented about 10 days ago on our Union Pacific video. Thanks, I've added to my watch list. I'm looking at CNI. If possible, please do a video on it. So that's what we're going to look at. CNI, this is another railroad company out of the industrial sector. And before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. Make sure you're subscribed to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Click the subscribe button down below. A lot of you watching the videos are not subscribed. Doing that would really help out the channel. And make sure you click that notification bell as well so you're notified whenever we put out any new content. I do the Stock Pick of the Day video series Monday through Thursday whenever the market is open. I also do stock suggestions or requests from viewers. So if you have a company like CNI you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below in the comment section and I will work it into the rotation. And a special thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. And again, if you haven't done so, click that subscribe button, drop a comment down below, and watch the videos to the end. Watch time is one more metric that the YouTube algorithm uses to spread the videos. Now, this is the Vested Interest Stock Screener. This is how we're going to run through the videos. This is the criteria we're going to look at. We'll check and see how it stacks up at the end. It must meet 5 of 8 to make it onto my watch list, or 6 of 9 if it was a financial company like a bank or insurance company. Then we add in price to book. This is not, so we won't look at that. You can use price to book for any company, but if you use it outside the financial sector for companies like banks or insurance companies, make sure you're looking at the company's price to book compared to similar companies in the same sector. So for CNI, for example, you could look at their price to book. It's around a 5. You'd want to compare it to like a Kansas Pacific Railroad or Union Pacific Railroad. Look at their price to book and see how they stack up. You can also look at the current price to book, compare it to its historical average and see if it's high or low, and see how it stacks up compared to itself as well. But price to book being a 1 fair value, that works for banks but not for other companies. Now back to CNI. Check them out on their homepage, www.cn.ca. That is their homepage where I pull this information from. Again, that is www.cn.ca. Again, this is a Canadian company if I didn't mention that before. So if you were to buy this, there would be some tax implications around the dividend payout. You either need to make sure you account for paying that at the end of the year in your taxes, or like my brokerage account, it takes it out automatically. Your brokerage account may do the same. Just make sure you understand which way it goes. Now, again, this is a railroad company. I pulled together the map here. This is the map of all their rail. You can see here CN is the red, right? So that's where they go. They are primarily in Canada. They do go down into America here. They are also a shipper, right? So they do over-road shipping. So rail, intermodal, trucking, supply chain services, business development. Those are all the services that they are. The maps are just the maps like this one that I was looking at online there. You can see here CN stations. So if you clicked on that, again, kind of zoom into the map, you can see where all their stations are. And then all the industries that they service: automotive, coal, fertilizer, temperature control, cargo. So if you're shipping something that needs to stay cool or stay warm, forest products, dimensional loads, grain, metals and minerals, petroleum and chemicals, consumer goods, third-party logistics, customer reports, center beam auction program, boxcar auction program. So they must be selling some old boxcars, and demand status reports. So that is all the different services that they provide shipping for. CN's network is your connection to North America and the world, whether you're shipping across our rail network of approximately 20,000 route miles of track, shipping globally through the many ports we service on the 3 coasts, or leveraging 23 strategically located intermodal terminals across our network. We connect you with the people that matter most, your customers. That's what they're doing. They're shipping goods for businesses, and I imagine if you want to do it as an individual, you could ship something by rail as an individual. Now, CNI, which is the ticker, Canadian National Railroad Company, was down 0.28% on the day. That's why we're taking a look at them. They closed out the day at $115.52. Again, this is out of the industrial sector. 52-week range as low as $103.96, as high as $134.02. They are within 15% of a 52-week low. Anything under 119 is within 15% of a 52-week low. Market cap of $72.801 billion, so a medium cap company here. Not quite, might be actually leaning towards a large cap here. Beta of 0.65, so they are less volatile than the overall market. PE ratio at $18.81 per share, decent there. I'd like them a little lower. If you could get them back here closer to this 103, that'd be probably down in the 16 range. EPS $6.14 per share, pretty nice. Earnings date coming up the end of the month here, October 22nd. So tune back in if you want to see how their earnings goes. Forward dividend is $2.51. They are a quarterly payer, so divide by 4. And their current yield is 2.16%. Ex-dividend date, September 6th. So we are past that. They did pay out September 27th. So if you were to buy them now, you would be in line for the next dividend, but you are going to have to wait a few months. 1-year target estimate, $129. So according to Yahoo Finance, where I pulled this information from, they see some upside potential as far as stock price appreciation. Jumping over here to the right, we're going to take a look at dividend yield theory to see if they are potentially undervalued. To do that, we look at their 5-year dividend yield average, 1.80%. We compare it to a current 2.16%, or over here where it says forward, 2.16%, same number. And since they are higher, the current dividend yield is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, payout ratio, I like anything under 75%. They're sitting at 38.84%, so that is much lower than I look at. Anything under 75% is safe, in my opinion. This gives them plenty of room to increase that dividend over time, continue to pay down debt, make acquisitions, increase the dividend yield over time, all the things that companies do with free cash flow. And speaking of free cash flow, we want growing free cash flow over time, because typically if a company has growing free cash flow, they have growing dividends to match. So going back here to December 2021, you can see $4 billion in free cash flow. 2022 looks like it dropped down to 3.9. 2023 further dropped to 3.7, and the trailing 12 months, which accounts for most of 2024, but still a couple months in 2023, looks like it dropped to 3.5, though we'll have to wait to see how the rest of the quarter shakes out here. Repurchase of capital shares, you can see here they are repurchasing their shares, and some of the drops over the years can be accounted for in repurchase of shares. 2021, $1.6 billion in repurchase of shares. 2022, up to 4.8. So part of that drop in free cash flow can definitely be accounted for in the repurchase of capital shares here, increased to 4.8 from 1.6. 2023, though, it does look like we did indeed have a drop in free cash flow, because their free cash flow is down to 3.7 from 3.9. and the repurchase of shares was down from 4.8 billion to 4.5. So 2023 is definitely a decrease, not much, but a decrease in free cash flow. And same thing with 2024, at least according to the trailing 12 months so far, they have reduced their repurchase of shares and reduced their free cash flow, 4.4 billion. So they're still repurchasing a lot of shares, just not quite as much, at least according to the trailing 12 months, which does still include 2023. So because of the downturn here slightly in 2023, we're going to say no on growing free cash flow. Jumping over to stockanalysis.com, which is another source I go to for information. You pick any sources that you like. These are the two that I like, or the two that I go to first for information. And I always recommend more than one source so you can make sure the information you are getting is accurate and up to date. Now, they do have 15 analysts that have taken a look at this. They call it a consensus hold. Low estimate of $113, which would represent a 2.18% drop from where it currently sits. Average estimate of $128.22 would represent a 10.99% increase from where it currently sits, and that's pretty close to what we saw with Yahoo Finance on the previous page. And they do have a high estimate of $190, which would be a 64.47% increase, all the while you could collect that 2+% dividend yield if you were to buy them now. Jumping into statistics here, we're going to look at return on equity and return on invested capital, see how well the company is reinvesting its capital back into itself. And that's ROE, return on equity, and ROIC, return on invested capital. I like 10% or better for both of these metrics. Return on equity sitting at 27.41%, beats the 10% I'm looking for. And return on invested capital at 11.19%, again, beats the 10% I'm looking for there. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 7.52%, like that. And revenue growth forecasted at 5.88%, good number. So EPS growth looks good. Revenue is what I look at more on a deep dive. So this is not one of the metrics, but I'd like to throw it in here anyway. Looking at their dividend history, again, quarterly payout ratio 40.37. I think they had 38% from Yahoo Finance. Stock Analysis had them at 40.37. Either way, under 75%, very low payout ratio. Dividend growth says it's negative. Now, I think some of that is because this is a foreign company, Canadian company here, and there is an exchange rate. So this fluctuates over time. Buyback yield is positive 4.19%. They are buying back shares in opportune times whenever they're fairly low. Shareholder yields of 6.35%. You want to see positive shareholder yield. Nice numbers overall. They do pay out on the March, June, September, December time frame. And you can see here going back to March 9th, 2022, they were paying 73 cents, fractions of a penny. June 8th, 2022, 57 cents. September 7th, 2022, 73 cents. So maybe there was a decrease because they've dropped down to 62%. So maybe there is a decrease in dividends here. Maybe this is not all accounted for. This decrease anyway is not all accounted for. This negative, maybe there was a negative drop because like I said, 75, 73, then to 57 in 2023, 59 in June 2023. September was back to 57, 2023. Some of this, December 2020 to 58. 2024 was 62, June 61, so far 62. So some of this can be accounted for in the fluctuation of the currency exchange, but this 73-cent drop down to 57% drop, that does look like a drop. I don't think that can be accounted for unless they really got cheap. The exchange rate got really out of whack there in March of 2023. I think this represents a drop, so maybe that's why they're showing that negative dividend growth there. So I'm not going to say they have growing dividend. Now back to the screener here. So we start with understand the business. We got to check there. Again, they're a railroad. They're a shipping company. That's what they do. They do have over-the-road shipping, not just rail. Growing free cash flow. No, they had the one down year. Growing dividend. I'm going to say no. Dividend payout ratio is under 75%. Check there. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, so check there. Return on invested capital and return on equity both over 10%. Check there. Earnings per share growth is over 5%. Check there. We're not looking at price to book, so it looks like 1, 2, 3, 4, 5, 6 out of 8. This will make it onto my watch list. Actually, I believe it's already there, as well as CP. Kansas Pacific is another one, railroad that I've got on my watch list also. So might be another one to take a look at. Well, Arlene, hopefully you enjoyed that one. Let me know what you think in the comments section down below. Let me know, are you buying this one or is it on your watch list? Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So like Arlene, if you have a suggestion, go ahead and drop it in the comment section down below. I'll try to work it into the rotation. I think I got back to hers in about 10 to 11 days. So that gives you an idea of how fast I can turn them around. But it really depends on the stock and what else I have on the list. So it may take me a couple weeks, but I do keep them on the list, and I'll try to get to them as soon as I can on a day they pull back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great weekend. We will see you in the next one. Hey, I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion in an investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select your criteria, or seek the advice and counsel of a certified financial advisor.